Throughout history, gold has always been seen as one of the greatest investments one you can make. Currencies come and go, even the US dollar would probably be worthless someday in the future, but gold has never lost its value throughout my millenniums. Gold is used to the wide range of the industries. Some make jewelry out of it, others it's in the manufacturing of the certain electronic and medical devices, and other invest in it like you probably since you are watching this video. As of the April 2020, the price of the gold is 1,657, significantly higher than it was, let's say, 50 years ago, $30. But the question is gold a good investment, or to be more prices that gold being a good investment? Well, the answer isn't really that simple. Since the evidence of the gold standards, the world has been overwhelmed with paper currencies. It is even difficult to imagine the world where gold is the currency, but it has been once upon a time, not that long ago. However, the modern financial systems is so complex that we can no longer go back to the gold standard. But what we want to explore is this video is if you have some extra cash in your piggy bank, should buy gold instead of the stocks or even the real estate. But before we answer the questions, we have to understand what drives the price of the gold first. So, besides having the unique and the beautiful color, unlike other elements, gold has always been the most trusted currency. Gold has always been used as a way to pass wealth from one generation to another. The preserve their wealth, because unlike gold, paper currency has always been quite worthless in the long run, but gold has maintained its value throughout the ages. The US dollar has been the most important currency for the last 100 years. Even today, countries all across the world have stacks of US dollars in the case of emergency. But even the US dollar isn't safe haven, because the value of the dollar has based on the actions of the Fed and the government. During the mortgage crisis, the economy was in the deep hole, and the only way to government to could save the economy was by injection trillions of the dollars into the economy to keep the dice rolling again. But that pushed the investors to buy more gold and doubled the price of the gold in just 4 years, 2008 to 2012. In fact, prior to that, between 1998 to 2008, gold prices have tripled. Historically speaking, gold has proven itself to be an excellent asset against inflation, since its price rises together with the cost of the living. In fact, whether inflation significantly rises, the price of the gold simply soars, and with the modern financial system, financial crisis happens quite often, but financial crisis meant chaos, and that means uncertainty. When it's not clear when the economy is headed, people want to feel that their wealth is safe, and that's why they turn to gold. During any crisis, gold often becomes the safe haven that investors look up to, since they want confident that no matter what happens, gold is going to keep its value, even when there is the deflations, when prices are decreasing, as it was during the Great Depressions. Gold prices rise. But that's not at all. Whatever the public loses confidence in government, they are also tend to turn their reserves into gold quickly, because political instabilities can lead to the chaos and financial crisis. Gold price, for instance, grew during his Brexit deal when world tensions rise. Gold prices usually opted for all over investments. But one can argue with all of the technological advancements we have today, what is stopping us from the mining more gold, and a huge supply would drive the price down. Well, even with the modern technology, it's not easy to extract gold. Gold mining production was not changed significantly since 2016, and the main reason for it is easy gold has already been mined. Miners now have to dig deeper and to access quality gold reserves, and that is the much more challenging and raises many other problems. Miners are exposed to additional hazards and the environmental impacts on the hating it. In other words, it costs more to get less gold. So all these factors add to the cost of the gold mine productions and making it less attractive to investors. Major suppliers of the gold is to make since the 1990s. Have been the certain banks such as Fed, since central banks keeps gold as one of their significant reserves. But since that crash in 2008, even the central bank significantly stopped at 7 their gold reserve. At the same time, the production of the new gold from mines has been declining since 2000, and bringing a new mine into the productions can take up to decades, which all led to rise of the gold prices. The demand for the gold might decline temporarily from time to time, but it always rises back because golden journey is the part of the many cultures, which means that there will always be a demand even when investors turn to other forms of the investments. But that hasn't always been the case. Once upon a time, not that long ago, gold was the international currency of the world and wasn't only used in the manufacturers of the jewelry. I know that it's difficult to comprehend that just 100 years ago people actually used gold as a currency. To understand how did we entirely moved out from the gold and are completely dependent on the fiat currencies, we have to take a look at the history. Over 5,000 years ago, gold with its scarcity had and beauty has captained humankind like no other metal. For the first times, gold was used as the solid coins around 700 BC. Before that, gold had to be weighted and checked for purity when settling targets. But these coins were not without their problems. They have been used in different shapes throughout countries. However, the bigger obstacles was that gold was simply too scarce, and digging in the from of the ground was much more difficult given the technology they had in the past. To understand how the scarce gold was gold back then in the 16th century, Spain extracted so much gold from the New World that it raised European supply of the gold by 5 times. Of course, paper money was gaining some popularity back then, but gold was still the main instrument of the monetary systems. But as the world economy started to rely on the debt, more and more paper money shown began to dominate world economies. But it had its fair shapes of problems. So the world came together to create the gold standard. At the end of the 19th century, 1871, it's actually worked pretty well. Inflation was around 0%, and the world found a common language to trade until the world decided to destroy each and started World War One. Even though the gold standard did not collapse, political alliances changed, governments began to run out of gold, and national debt so Reddit, which purchased the world to move to the something more flexible to base on the world economy, especially since gold supplies continued to fall behind the growth of the global economy, which ended in a few nations holding most of the gold's reserves, such as the United States and Britain. The Great Depression of 1929 made it only worse. War debts forced many countries to abandon the gold standard. Even England had to get out of by 1931. And guess what happened after World War II? The US had 75% of the world's monetary gold, and the dollar was the only currency still backed directly by gold. But as other nations began to rebuild their economies, gold slowly began to leave the US states, especially with the war in Vietnam. The US went into the difficult and was afraid that it would run out of the gold. Countries like the Belgium cashed in the dollars for gold, and many others were intending to do the same, which pushed the United States to completely abandon the gold standard in the 1971, which was the end of the gold standard. The truth is, although gold has always played some role of the currencies that thousands of the years. The true international gold standard existed for around 50 years, from the 1871 to 1914, and today the price of the gold is determined by the factors we have discussed earlier. However, the main question remains: has gold been the good investments? Well, the answer is both yes and no. It highly depends on the time frame. Sometimes it outperforms other investments, and other time investments in the stocks or the bonds would have been much better options. Gold might be a solid investment, but it's definitely not the best all the time. If we take a look at the last 15 years, yes, gold did actually better than the stocks market. But if we take the longer time frame, such as 30 years, then the stock market has significantly outperformed gold. The Dow Jones Industrial Average has gained 839%, while gold only 280%. Even returns from the corporative bonds 450 have been higher than gold. However, if we take the even longer time frame, such as since the abundance of the gold standards in 1971, gold 4,500% has outperformed the stock market 3,200% by reasonable range. Are they going to be good investments during this crisis? Well, it's impossible to say. Maybe it might be, maybe not. Only time will tell.